Hi, this is Elliot Wavesage. Let's do a market update. Like always, none of this is financial advice. Always do what's best for you. Use this for your education and entertainment purposes only. So, we have a Fed meeting tomorrow. The market is primed for a massive drop and correction, but there's some bullish undertones that remain. I think tech is very susceptible to a crash type move, but not all the sectors are set up that way. So could it be a market-wide crash type thing? I don't think so, but there's always that chance. I do think if the markets drop hard tomorrow, I think it's a buyable dip. I don't think the next leg of the bear market starts until you get a earnings recession in the mega cap stocks. When that happens, I do believe the markets will be finished. At that point, that's what ended the connector wave in the dot-com bubble, and I believe that will end the connector wave here as well. But until then, I want to be a little more aggressive on dip buying. But I am not interested in technology. I will not buy the dip. I refuse to participate in FOMO and chase. Even though it could still go higher, so be it. It will lose and correct everything that has been gained for the last month. I'm sure, almost certain of it. So many gaps need to fill. That's all going to happen eventually. Then we can look to buy tech. Let's start with the Dow Jones. The Dow Jones had a significant break today that I thought was noteworthy. So if we look here at this structure, if we really look at what's going on with the Dow, one of the areas that I wanted to be careful about was this pivot here. As you can see, you really have 5 waves up and then 3 down, and we broke this high. So what this does is this sequence. This is a B, C. This C should extend higher. It should extend higher. This would be a surprise. It would be very shallow if it ends up ending here. So I think if I look at the Dow, it should extend to 35, 358. But if it extends there, it's going to break on the December high. And once it breaks the December high, then you open up the door for the Dow to go to new all-time highs. And potentially, we need to think, that the market will be supported, at least the Dow sectors for now. Because if you remember, this was the October low. The Dow almost V-bottomed, but tech, took a long time. So perhaps the Dow is going to V out of this, shoot out, and tech is going to meander sideways. So that's why I think the Dow could be a better trade right now than the technology sector. While the technology sector could be about to cool off, especially if rates will rise more, or especially if the inflation trade gets back on because the Fed, does something, that the market perceives as a mistake. And that's the key. Well, how does the market interpret what they do? Do they raise rates, and the market may cheer that, but it may not. It may panic, or if they don't, it could be a sell the news event. We don't know, so I'm not going to worry about what the news is going to tell me. So now, could this be 3 up and here's 3 down? Yes, it could still technically do that, but I think it's not likely, given what I just showed you, which is why I want to be more aggressive buying the dip in the Dow. I mean, it could still do that. So this would have to have a catastrophic decline, because this Y leg would need to come all the way down and break that pivot, I would imagine, bounce, and then go low, another swing lower. So we would have to have a spectacular crash, like now, like on tomorrow, to do this. Because if not, this is going to play out. And once you really take this, then there's no doubt in my mind that we'll go to new all-time highs in the Dow. And then to me, there would be no business being short really anything, even technology, even though technology may lag or participate. the market will continue to grind higher, but I do think the Dow will accelerate, and then of course it will bring the Russell up with it. And I believe we're starting to see that already with the futures. So like I said, this got negated. My chart got negated here today with this high break-in, and then once that's negated, now we're not going to more than likely go right down in this bearish structure. And I warned you guys that the Russell has a fractal where you drop, consolidate, pump, crash. And here's another one: consolidate, pump, crash. And I think I can just point that out. The Russell loves to do that. Here's another drop, some consolidation, a pump, and then down. So my guess and this is a much bigger fractal, is it's going to do something similar where we have a drop, consolidation, a pump, and then a crash later, like that. So I want to play for this. I want this upside, right? I want this upside because we could come all the way back up to this area even. So the Russell could really be very lucrative. Small caps can be very lucrative, but remember, small caps make up not just meme stocks, but it makes up, the small oil producers, the small regional banks, right? We all know about them. So I wouldn't be too bearish on those sectors. They may get a counter trend rally here, and then maybe the tech memes rally too. Maybe GameStop and all that shit's gonna go to the moon again, and we're gonna get a Russell small cap. So I do want to be a little more aggressive in small caps and pick through some good ones on some charts, and some of them are already starting to move because I think you're gonna see this play out. Now, the shorter time frame. I was thinking, could this be a wave 5? It still can be, but a wave 5 typically doesn't gap open like we saw here. Now, it may still end up being a wave 5, and then it should come back to this 1860 area. So, it's a buy. I think the Russell would be a buyable dip, and I think if any sell-off tomorrow is buyable to trade up. If the market goes down, feast on fear. Tomorrow will be a feast on fear type day for me. Feast on fear. And I posted feast on fear on my Twitter back in this area when we were playing for the melt up, when I actually got death threats for saying that. And now I know why. It's because the smart money was loading up, and I was like telling you guys what was, giving you the answers to the test before anybody was sharing that. All the little guys you're following now that are like, buy calls, buy this, buy the Tesla call, buy the, I was telling you guys to go long all down here, all that shit. I told you guys to buy Tesla at 125. My mistake was taking profit too early and then just sitting out the stupid pump, because then the dumb money is just chasing, and it's the greater fool theory now. But yes, this was the time to be aggressive in technology and feast on fear. And we may have another episode, but I wouldn't feast on fear on tech. This move needs to correct for weeks, maybe even months. So I would just get technology out of your mind, erase it from your brain cells. I would not be thinking technology dip buy unless it's a historic crash, which then it's clear we're in X, and who the hell wants to buy that? So I think tech, my thinking is stay away from it. Aggressive on the Dow, aggressive on the Russell if we can get a big drop tomorrow into the news, after the news, and feast on that fear in those sectors. And I think that's the way to play the bounce, and that's how I play it. Feast on fear on metals, feast on fear on Bitcoin and crypto. That's my thinking. Tech, leave it, forget it, not touching it. Sidelines, watch the idiots lose all their money if tech crashes tomorrow, because it could certainly do that if the Fed raises rates when the market doesn't expect it. Tech could get wiped out. And again, I wouldn't be surprised at some point we see one candle take all this shit out here, all this stupid, I call it stupid move, and come right down to here. And that wouldn't be that big of a decline. That's like just May 9th's lows. I mean, so that's how stupid high tech has got right now. Um, but do what's best for you. The Hang Seng, if we can break this downtrend line, then you have to respect that the three wave move is done. Then we're not going lower. And that's good because that's why I like emerging markets, weak dollar, inflation trade. That's why I think emerging markets is a good opportunity. When I look at China, emerging market ETFs have some China in it. So you're not just like dumping all your money into China, because there is a risk that one day, if they wake up and invade Taiwan, I promise you the markets will be limit down, and this will be the grand super cycle will end. So that day, I don't know when that's going to happen, if it will, but that is always in the backdrop, right? I mean, X will end when if we wake up on the weekend and China has invaded Taiwan, X is going to be in, and you will not be able to get out of any position. I think it would be a massive risk off, except for maybe the gold, silver, and crypto's yet to be seen what happens. It'll be a safe haven, mad dash like we've never seen before. So keep some gold in your portfolio. Keep some of that because that's out there. That risk is out there, and I do think that's just going to happen one day when no one would least expect it, or something similar, some geopolitical event, and it's game over for the market, grand super cycle. But until then, this is really fun to be part of and get in. Some people are getting rich, but because they're risking everything, or they don't even know what they're risking. They're just following what people say. But those people that say that, they're actually taking profit in and out, but their followers are just oh, I'll just YOLO it in, and I don't you gotta be really careful. If you traded in 2018 when Volmageddon, this shit can unravel very fast when it's time. Volmageddon was a great unraveling of a massive pump, similar to what we're seeing now. I remember that event, and if you guys don't know that event, you need to go watch some videos on what that happened and talk to some traders that traded Volmageddon, because that was some scary shit. There you go. Look at that. That's some scary shit because they didn't know what was going on. Now, if you were an Elliott wave guy, you knew, oh, that's just a four. Though, again, feast on fear. And then, I remember trading this, buying. I think I bought in somewhere up here, and then the summer, I think it was, yeah, we got up into this March time frame. I remember, or yeah, maybe the SPY had a different look at it if I remember right. But I do remember it kind of meandered up, and then all hell broke loose again because rates started going back up again, and then that was the Fed policy mistake. Yeah, see, so this had a little different structure than technology here. Like it kind of through the summer melted up, as you can see, and so I was on the beach, just like making money, printing money, doing the thing, and then it's like August came, and that's when all hell broke loose, kind of. And it's like, oh shit, what's going on? And then it's like, hey, I'm losing money, and then you get out, and I've always told the story here around my first really bad experience trading puts, because again you should see a three wave move, but as you can see, this whipsaw really confused me as a trader. I wasn't as proficient in Elliott waves as I am now, and as we're whipsawing around, I'm holding puts, I'm watching my money bleed away, and I'm like, fuck this, I'm dumping this shit. And I literally dumped it right before the Fed meeting, and not really paying, not really understanding the market. And then this happened, and I lost millions, literally millions. And that was a sad day. So know what you're doing with. If you're trading calls and puts, you got to know what you're doing. All I had to do was hold it through that news event, and I would be in a different position today. But it's spilled milk, but you learn from those mistakes. And I'm just sharing that mistake so you guys maybe can learn from the same thing, because that's about to happen in technology. If you whether you believe it or not, you're about to get a massive drop in technology, but we don't know when that moment will happen. So until then, enjoy the ride. But I do think the sectors to be in the Dow, SPY, and pullbacks. I'm sorry, Dow and IWM, because the SPY is really just tech. It's so heavy tech. I'm not interested in SPY. Okay, crypto is interesting. So crypto should take one more dump. It really should. It technically, three, connector three. So someone's like, "Why are you buying crypto here?" Well, I bought Link. Link is actually showing it's finished, but if Bitcoin's going to take a dump, it's got to go lower, right? It should. I mean, I'm not that good to call an altcoin bottom that trades outside of Bitcoin, but it was doing okay. We'll see. I still think it's in this kind of end in diagonal, and this is I'm holding for the 4 year cycle. Bitcoin that usually, we got a pump coming. I mean, these altcoins are going to pump, especially ones like this that really haven't, and they still have respected the low. I do think you're going to get a bigger pump at least out of these. So I'm gonna be patient, but I do think Bitcoin. I want to be a little more aggressive because it could be a wave three. If it's a wave three, it could be shallow and truncated, and also it could be even a wave three of the grand super cycle. So that even could be even more on shallow the dip. So and given where tech is doing in the market, I need to not be shy to pull the trigger. Although I do know that there could be more downside, but I don't really care based on how I'm managing my money and what I'm doing personally. But do what's best for you. I'm not interested in ETH. I think ETH has got issues fundamentally, and anything I buy in crypto, I like a clean story. And right now, there's some fundamental problems that are, a lot of FUD out there that I don't like. Even though technically, yes, it should bounce at 1533, I don't really. I'm gonna avoid that. Dogecoin, they're trying to save. That this wick has to hold, or if it breaks this, then it's in a very bad position. And some of these charts do look really bad. I would avoid them. You have to pick and choose your winners and roll. But Bitcoin is obviously the one that needs to really bounce here. So crypto, why another reason I like to be aggressive is GBTC has finished its sequence. It's easily a 5 wave move up. I mean, guys, it doesn't take a rocket scientist to see it's 5 waves up with divergence. I mean, it's an impulse, guys. It's an impulse off the bottom. There's no way this is 3 waves down either. So this move needs one more swing higher. That gives me confidence that Bitcoin will still swing to the higher, and we made 3 wave move. We're in my target area. Could it go lower? Sure, but I gotta pay attention to this, and I have seen GPTC signal the turn in the market before Bitcoin shows it. I don't understand why that's the case. Maybe there's guys that trade off of this or arbitrage it. I don't know what it is, but I need to respect it. And then my other thing I need that really kind of confuses me too is LTCN shows another impulse off the bottom here. Let me kind of go back to the daily here. Clear impulse with divergence. So this is a clear 1-2 here with a 3 wave move in the buy area, and it actually reacted nice, and it did pull back, so it could still go a little bit lower. But okay, if LTCN is in a buy, why would that do that if I think Litecoin's going down? And then I look at it's, so if you do the math, it's traded way below NAV. So LTCN's way below NAV. So these two coins equivalents are way below NAV. So they may actually not they may not drop or even drop at all as Bitcoin finishes this little dip down here. And then that also means Litecoin may not make it as low and may be too bearish on the overall flat structure. And if that's the case, then you have a 3 wave move down and a 1-2 pattern where one is here, A, B, C, and you just break $60. So that's something to keep in mind if you're trading Litecoin. I could be wrong in this forecast, and it seems like it may be given where LTCN is. So maybe it net tags $56, and then comes out of this. So I would say do what's best for you. I'm not actually buying the coin, but I am a buyer of LTCN while it's still in this area. We'll see what happens. Do what's best for you. And I do like G-Link, but G-Link is way over premium, way over NAV. It's like essentially like 11 bucks a Litecoin or something. It's just ridiculous. It needs to go down more. So I won't buy that. Mara, I still, this is crazy consolidation. I mean, it would be really awesome to get this drop to 630, but I don't know what's going on. This is like a super bear flag. I do think it should puke down with Riot. One more, you know, I guess it could be done here, but I would like it a little further down. A little, like, if we could puke down here, I will be picking up this for the long term. No more trade in, even though I traded this pump. And again, if you followed me, we gave you, the buys and all the miners, right? We said I called all the miner bottoms, but I got out because I took profit, right? Took profit, and now I want to get back in for the long term. Now the long term hold, yeah, and that's kind of what I want to do. And then, let's just click through some things and see if we can find anything interesting. Commodities, I'm not interested in. I do think oil, it's a wild card. I'm not trading oil. I'm not trading energy. Again, this X could be done, or it could come up to 87 in another swing. But there's a huge move coming in this. And if the Dow's going to make a huge move, maybe energy is going to go higher first before it goes lower, right? It would make sense, right? Energy pumps and then crashes. The Dow crashes. So I'm leaning toward higher in oil. Gold, I gave you this A, B, C structure. I'm still going to be long these commodities and just buy more. For long-term accumulation, I personally don't think. I think it's 50-50 if this low breaks tomorrow. I think it's all about what the Fed and what it's perceived to do. And but if it does break, it should head down to 1830. And so if you're trying to go long here, probably want to have a stop loss at 1930. And I'm sure everybody else does, and there'll be a waterfall sell-off. But there's no guarantee. So if you trade, the stop loss is so shallow, it's worth the risk reward. Do what's best for you. And then silver again, could it make another leg down, a massive dump? It might, but if the market's going to go higher, it still could be a flat, an ABC, and we get to that $30 area. So I want to be aggressive with a stop at 2270. Natural gas is going to trade with oil. So if oil will pump, natural gas will pump. And I've already said if that becomes 4, it's too big. That will set the low here, and then that should start the bullish cycle. So watch oil. If you see a big move higher in oil, then the likelihood of this happening is slim, and eventually natural gas will follow suit, even if it's lags. I think, as just my opinion. But based on my observations, and then someone posted like these bear flags breaking out, bull flags, and I saw this today, and that's what got me like, yeah, screw tech, because if this is about to break out, because the Fed is like, oh, market, you think we're pausing? Screw you guys, I'm giving you 50 basis points. This thing's gonna go boop, up to you're gonna get your 3 of 3. So the market may be telling you like what the Fed's about to do. The Fed may be about to raise rates tomorrow, and the market's gonna hate it, and it's gonna puke. But it's going to puke down. But then there'll be maybe a soft press conference, and then certain sectors get cushioned, right? So that's why I said it could be a feast on fear moment. We don't know, but just keep this in mind that you've got this breakout, and the market could be tipping its hand. We broke out here, a higher high, in a 1-2. It looks like a 3-4, but it's not. It reset the whole cycle, this whole cycle, so it's a full impulse. I would still call it. We put this. We better call it like that. So 1-2. So again, it looks like to me rates want to go higher, guys, higher, and that's bearish for tech. I think bearish for tech. The VIX. I've seen this inverse head and shoulders before, and we may be ready for a massive breakout. Dollar index is a wild card. It could do what I have here, which would be risk off, right? Risk off. and metal, like, that would really hurt a lot of people. But then it would be a buyable, again, buy feast on fear, or it's not going to happen. X is already done, and this is just a massive 1-2, 1-2, and the dollar crashes, and then you'll be glad you're in the metals and commodities and everything else. So I don't know. Very, very important day for the dollar, I think, tomorrow. Then let's see, healthcare stocks we haven't looked at. Again, nothing I like in healthcare that I'm really following. That I want. I'm not going to chase things. Let's look at hot charts. What's acting weak? So the e-commerce stocks look like they want to pull back deeper. So I would be careful. Again, Wingstop, 174. Uh, Not a lot of sell-offs today. More a lot of strength. Celsius finishing up its final swings. Yeah, so nothing there. How about on technology? Oh, AI made its wave 5. Look at that today. I wasn't following it. Refused to trade it. Okay, so now you have 5 waves up on it. So this would mark the bottom, and now the first pullback it shows is a buyable dip in 3 waves, but you really need to see it play out on the daily time frame. Hopefully something like that. If you get that, it's a buyable dip. This tells me the markets support it, guys. The markets, because this stock has been running with the market. So again, it shows me the market needs more upside. And possibly technology too, but I'm not going to chase tech. Now, if it pulls back this deep, then tech has corrected, multi-month correction. Yeah, I'll take a piece of tech at that, but I'm not buying tech here for hopes it's just going to like do something like that, which you never know, it could, but I'm not going to count on it. Now Tesla, I think it's clear that this pattern is getting invalidated, and we're in some impulse off the bottom now in wave 3 as it extends. So I do think something like that's coming. So this 3 perhaps could tag $300, this resistance. But it's so stretched. This 4 will be bought. We'll be making a buy. It's going to do something like that, and then pull back, and then be buyable again later. So Apple's like not able to break the high. If it could drop, Google again. If it could drop, Microsoft. If it could drop. No guarantees. Facebook, if it can drop. AMD did, looks like it ended its 5th wave today. Massive downside. So it may be entering a much bigger correction, like something like that. We'll see. It looks like its impulse is finished, especially with that kind of dump. And then it looks like we're gonna break 420. If we can't, then this is still in play, this drop back down. But I do think it will fill the gap at some point. And then, I think Adobe's, again, people just so much FOMO and in Adobe. So I think Adobe's, the chances of this going back and breaking this low don't seem likely. So I would, if it can pull back, it could be another good dip buy candidate. Shopify is getting on people's mind, and like e-commerce, I think is due to pull back. I'd like to see it pull back and fill this gap eventually, hopefully in the next couple months. Etsy is still in an area that it could bounce significantly for whatever reason, but no guarantee. Chewy is continuing to go higher. I gave you guys this setup. It didn't quite get to the area we wanted. It was a few bucks short, but that's why you guys got to be aggressive and it may be entering its wave 3 F3 moment. And I think Chewy is more than just e-commerce. It kind of has some meme type appeal to people, so it could have some pump potential coming. Trade Desk, Kathy Wood loaded up on Trade Desk today for whatever reason. So I don't like trading it. I hate this chart. I really do. I just won't buy it. I refuse to buy it. Then, nothing else looks interesting to me. So memes, let's look at some of the small caps. Like, okay, how's Tilray these days? It's in this wave C down. 1, 2, 1, 2. Yeah, I still don't like it. It could be 3 waves down and a massive connector and shoot back to 5. So it's a roll of the dice. Again, these are the small cap meme stocks that you guys have asked me about. BBAI up 12%. Okay, guys, I've been telling you guys about BBAI all the time. And look at this wedge. I mean, this is like what they write textbooks about, right? Trade-in textbooks. I mean, geez, look at that. It broke out and closed outside the wedge today, and I'm telling you, the Russell may pump. What do you think may happen to this? Up. We'll see if I'm right. But just kind of keeping an eye. This Sound AI really could be another one to take off. Always keep an eye on Newegg. When it pumps, man, it pumps. And it may be due for one of those. I was looking at space. I don't think people are really watching that anymore. So I don't know if I want to try that like I used to in the past. Beyond Meat. A lot of volatility here. Fubu always, people love to pump Fubu. And yeah, I hit $1 and this thing was like $40 way back when, or even higher, I think. Travel Zoo. So I thought everybody's traveling. I don't know, what's going on with this thing. Let's take a look at Travel Zoo. Oh yeah, it's keep an eye on Travel Zoo. Wonder if there's some good news on Travel Zoo. That's a small cap I may take a piece of. WXYABC. You would have to call it like that. So yeah, I guess you could trade it against 391. If that's the case, this thing has got a massive pump, one of these type of pumps coming. Yeah, I mean, it seems like crazy talk, but if everyone's traveling and people start, it actually could start doing well again. I don't know. Good luck. I don't know. I think if it pulls back, I may speculate with it. It's got 3 down, so maybe it needs another drop down here to 7,841. GameStop, I'm not touching that, or any of these AMCs and apes. Plug is typical Russell stock, so if the Russell pumps, Plug will continue higher, and we may need to change the look at this a little bit. This is like a massive wedge, I think. Yeah, kind of like a wedge. So I mean, I'll be surprised if that's the low. Then it could be just a massive connector again, as people FOMO in hydrogen. We'll see. I don't know. I don't like it though. I don't like it as a fundamentally. Keep an eye on fuel cell. And just kind of looking. I'm not mentioning nothing in for solar. Arc I think once Arc takes out 45.59, then it's gonna be a really healthy pump in those stocks that she carries. Okay, and then Neo, how's it been doing? It looks like it's coming out of this, especially if the emerging markets are going to pump and China's done. So Neo, I would be more aggressive, but do what's best for you if you want to take a piece of that company. And if you were scared to buy it here, I don't know what to tell you. I guess you gotta, that's usually a sign that you do need to buy. If you're scared to buy it, then that's probably the right emotion that you need to have, because then that means the market is in the fear mode because you're afraid to go lower. But the technicals said that this was the base. And it's not going to come back there. Um, Possibly even the K-Web may have found a low here where we had it. Right there. So and then we haven't looked utilities in a while. It's in an area that it's in undecided territory. Nextera should drop a little more. All right, well, guys, that's all I've got tonight. If the Fed gives a big sell-off, I would feast on fear in the sectors I mentioned. I would take a pass on the technology sector, but you can do what's best for you. You may get lucky. I do think though technology needs a multi-month correction. That may also lead the SPY in a massive correction. Well, some of these other sectors that no one really loves, like the copper, the staples, the energy, maybe even with oil. So we don't know them, but I do think there's a surprise coming that market participants probably aren't positioned that well for. And like I said, we'll see how it goes. But I think, yeah, I think I wouldn't be surprised to see a dump and a rate increase, and then some kind of soothing talk at the press conference to get the animal spirits back up, and then go from there. I see the bear market ending. I mean, the bear market continuing, this pump ending when its earnings start to contract in the the mega cap. And for those that are like, well, how can the Dow break to a new high? It could easily do an expanded flat like that. So, and the Dow may be doing that, right? In the ES, this could do the same thing, right? And of course, tech could just keep going crazy. So we don't know, but we'll see. All right, guys, that's it.